Good morning, viewers, and welcome to the market review for Tuesday, October 20th, 2020. Here we look at developments in the financial and capital market as relates to the economy. Today, we will be discussing a review of the third quarter 2020 activities in the Nigeria fixed income market, what really happened, and what should we be expecting to play out as we are in the fourth quarter, the last quarter of the year. With me to lead this conversation is Mr. Ebo Ayodeji. He's now the Senior Economist and Head Research for Greenwich Bank. Nice to have you on the show.
Yeah, thanks for having me.
Yes. Now, Mr. Ebo, first of all, how are you navigating this period? We know that the youth, there's a protest around and all that. How are you navigating it, and is it having any impact on the market? Because I know that during the various protests in the US, they were trying to price if it had an impact on the Wall Street. But is this spate of protest now, the LCCI, Lagos Chamber of Commerce and Industry, said is already costing like 700 billion naira to the economy. Is there anything that shows a nexus that's impacting the market?
Okay, thanks. We all know during an era of protest, or when you have protest, there's a lot of uncertainty. Most times you only know how it starts. Nobody can either easily predict when and how it would end. So we saw that form of slowdown even in the equities market yesterday, and a lot of investors trying to stay on the sideline because it will affect distributions for businesses. Won't be able to move their goods from service to the other. You can see the announcement of schools that has been shut down. So it's really going to affect, also going to impact on business. So, but it's also what's the opportunity cost. We also know that life cannot be quantifiable, and that's which is what the youths are also clamoring, what we are clamoring for. Yes, that's at least, and something should be done so that at least lives can have value in Nigeria.
Yeah, very important. Let's begin with the bonds market. I mean, when we look at third quarter 2020, would you say we had more traction and activity? And also the budget 2021 presented by the president, does it spike prospects of more activities as we enter into the fourth quarter and definitely into 2021?
Okay, thank you. Looking at the third quarter, we saw that there's been reduction in liquidity or activity in the market. So it's been like a buyer's market. So for most people that had positions are holding on to the position because we saw that there was only one direction for the market, which was rates to moderate. For instance, if you look at the bond market that opened the quarter with an average yield of about 10%, moderated to about 8.5%. And looking at it from the longer end of the curve, you would also discover that that moderated from over 11% to close to about 9% at the end of September. So for the traders, it's more about capital gain and not about the interest. So when you look at for a lot of the traders, it's a quarter to remember for good for them because for those that have taken position, them have taken profit. A lot of investors have made money. But for long-term investors, when you look at your annual return, it's really not interesting. Even for the T-bills market, we saw even for the home market that opened the quarter at about 3.8% for the longer end, that's 364 days. That moderated to about 2.8 at the end of September before we saw that major decline last week to about 2%. Yeah, so for the fixed income market, it's been a buyer's market. Most people are holding on to their position to take advantage of the decline, and we expect that that's for most people that are taking position as early as June or July, then they all be in the money. So it's for major guys that have been in the market. It's for them to begin to take profit towards the end of the year. And linking that to the proposed budget by the president to the National Assembly, when you look at the debt element, deficit is about 5.6 trillion, and we are trying to raise about 4.2 trillion in the market. Yes, they are looking at both the domestic and the foreign markets. So when you look at for the foreign market, we know it's going to be a pricing game. We expect about $500 million of our 2021 Eurobond to mature. So government may want to refinance that because it will have significant impact on our reserves. And coming to the domestic market, you would also, when you look at the 4.2 trillion, so no government will be aggressive to raise a lot of these funds from the first quarter. So that is also expected that it will increase rate. But I think by and large, what has made this, has reduced the rate is the high liquidity in the system. Will continue to see very high maturity on a week basis relative to the issued amounts. And not very interesting development that we also saw was the reduction in corporate issuances. We feel that this low interest rate environment should spur a lot of the corporates to begin to issue bonds or issue commercial paper to refinance their position. But when you also look at prime lending rates also in the markets, it's also reduced to almost single-digit rates for companies that have high rating. So
it's very clear, Mr. Ebo. I mean, the last part is quite of interest to me. The corporates over the years, there's need for them to be really active in the market. There's been this crowding out, which has been a challenge. Are there other factors that could spur them, apart from the fact, like you said, that the opportunities for them to deepen activity in the bonds market through issuances and commercial papers? Are there other factors that can really encourage them? Because we must admit that several of them have been engaged, Dangote, Guinness, and the rest.
Sorry, I missed that, sorry.
Okay, I'm saying that, yes, your last part, you talked about the corporates, that they've not really leveraged in third quarter the bonds market as is expected. There's been low activity. And you also said that there's a huge opportunity for them in that regard. Are there additional incentives that could woo them so that maybe in the fourth quarter we could see some great activity in that regard?
Okay, I think part of what we feel that some of the investors may be looking at is they are looking at the process of issuance. Sometimes it can be very cumbersome, and most people are also trying to be, most firms or companies will also be careful. They don't want to go to the market and not be able to raise their amounts, and because it would also rub off on their future issuances. So, but by and large, we know like the FMDQ is also currently trying to organize a webinar where they also want to enlighten the corporates on why they should also take advantage of commercial paper. Because yes, it may look so straightforward, like a no-brainer, that if you look at your current debt even with the bank, it's currently at maybe 15%, and if you can refinance at 7-8%, it's a lot of savings for you. And even if you decide to now come in and issue bonds, so the next 4 or 5 years, you're looking at even at 10%. So even when rates increase, you are not also bothered, and you are not talking to you won't have to also raise money from the, raise a line from the bank to support your business.
Yeah, very, very important. The latest insight we're getting from analysts is that they're expecting to see more action, like you said, from profit takers, which will likely cause rates to increase slightly. especially at the belly and tail of the curve. Will that really impact the activities in the market? Because with more profit takers tendencies, this will affect rates, like you were saying earlier. How long would that happen if this is the case?
Okay, thanks. So we are very cautious from this week or next week that we'll begin to see that profit taking. A lot of traders want to close their position. They're already in the money, and they will need to book those profits. And rightly said, towards the mid and to the long term of the curve. So we'll see that profit taking, but it's not. We're not expecting any significant shift. Yes, a lot of the investors are also waiting on the sideline not to buy at these very low rates, for rates not to move against them, or if I say not to buy at this very high price, because for some of those bonds are already trading at 2 times the premium, 200 naira, to their 100 naira par value. So if prices move against them, it can be a major loss. So what we would see is a gradual shift. We believe that we're approaching the tail end of the low interest rates environment. And towards the next year, there's also the expectation that government will also need to raise a major part of their borrowings in the first quarter, so that they can have that money to begin to implement a lot of the things they have in mind. So the expectation is that rates would may change direction within the shortest period, and the investors have to also to be cautious. For those that are also going in, it's more of a short-term trading. So you buy within 1 or 2 days, you see a position, and you also want to exit, but you can't at this position. You can't be comfortable holding it for the long term.
That's the one important area.
Note. Well, let's look at one area that we discussed even last time that is still of interest to everybody, where the monetary policy players have a key role, which is the FX market. When you look at the third quarter, what for you stood out in terms of the activities in the FX market? I know you raised the issues around liquidity, clarity in policy, and transparency in the last time we had this conversation.
Okay, yeah, thanks. I think what we've seen in this last in the third quarter is we saw the resumption of intervention from the CBN at the investors and exporters window to try to clear the backlogs gradually, and that has also that has improved a bit of liquidity within that space. And also CBN has also, for the foreign investors, able to also structure the home market for them to also benefit and cover a bit of the depreciation of the naira that some of them have suffered. So I think there's been improvement in liquidity. What the major area where we feel that there should be improvement is looking at it at the parallel markets now. We've seen in the last few days the naira has depreciated within that space, and I think maybe it boils down to improving the liquidity within that, within maybe liquidity to the BDCs, so that we can see we can begin to see a reduction of demand within the parallel market. We also saw some banks are also reviewing their cumulative dollar limits upwards, which is also very positive. And we believe that if we're also able to sustain that traction, confidence will be restored.
I was going to ask you, Mr. Ebo, the budget is 379 in terms of the FX estimates. Do you see that as realistic and sustainable for the economy? You remember that it was 305, I think, 2020, when it was initially sent in 2020.
Yes, for us, we have the view that this may be reviewed upwards towards the end of the year, depending on how things pan out. They've decided to adopt the current CBN rates as the official exchange rate, but based on reality, there may be a shift towards the end of towards the level of next year, and it's even also in favor. It also favors the government because it increases their naira revenue. We saw that major jump when it was reviewed from 306 to 360 naira per dollar, and back allocation improved despite the reduction in the dollar, and so it will also favor government. And I know as we progress, even the National Assembly, or there may be a need for a revision depending on how we're able to get sustained oil proceeds. If that turns out likely, and then there may need to be also a revision within that space.
And then looking at globally and externally during this third quarter, of course, you know that the activities in the Fed, US Fed, and even decisions in the European Central Bank and Bank of England will always be monitored. Beyond that, we see the lack of clarity yet. The Prime Minister of UK, Mr. Boris Johnson, says he's not sure that we'll have a deal Brexit. He's still talking about a no-deal Brexit situation, which is a part of the global things that could affect the market, the fixed income market, which also watches what happens globally. What for you are the key global factors that shaped and impacted our market in the third quarter?
Yeah, so I think if we look at what is happening within the global space, there's been a lot of quantitative easing to keep rates really very low. But and because of the continued COVID-19 pandemic, we're already seeing second wave of lockdown. So for them to be able to keep the economy afloat, the rates may remain very low. So what will happen is that we would see more fund managers looking at frontier and emerging markets within that period. Yes, for the Brexit, there's been a lot of back and forth, and it's led to significant volatility in the market and a lot of uncertainty within the market. So the focus of Boris Johnson would be to see how he wants to first get over this the pandemic, then to see how he wants to reflate the economy, and to do that, interest rates would have to be low. There will be some palliatives or government support that would also need to come in, so that business activities also improve. And I think for us, as long as we were able to continue to show some form of confidence or direction in our FX rates, then I think that would also help us attract some of the fund managers that are in search of higher yields across the frontier and emerging markets.
Yeah, because this year, just to take you up on that one, this year has not been an interesting year for the markets. When you talk of yields, it's been a low yield challenge environment. Let's look at the fourth quarter now, which we're in. What for you will be the key things that will shape the whole value chain from the bonds to the FX market? What are those key decisions and steps, monetary, fiscal, and developments in the market that we should watch out for?
Okay, so I think thanks for that. We're already moving towards the end of the year, and for most of the traders, what we also expect that will be more prominent is profit taking. And looking at even for the government, we saw the October bond auction and the significant reduction in the amount that will be offered. Also, taking out longer tenured instruments, also a signal that they want to reduce the maturity of their loan. So that is part of what will shape the market. That was part of what supported the equities market on Friday, and because the lower the issuances, the lower the amount of so we still feel that they may need to bit, even if it's to about 7% before the end of the year. When you look at the equities market from a dividend yield perspective, and compared to the shorter term instrument that you get in the fixed income. And for monetary policy, based on the last MPC meeting, the direction looks very clear. The MPC and the CBN wants to, wants to keep rates very low, also trying to see how lending rates can be reduced, because when you see deposit rate now almost at 1.01%, when you consider the normal risk premium that they had to hit, so lending rate has also moderated, especially for the prime lending, and is for most of the banks to begin to see how they want to recreate maybe loans in more. The opportunity now is to look at a bit of risky loans, because what you typically find is banks trying to refinance existing loan space because of their rating in the market, and that has brought prime lending rates down significantly. But when you look at the maximum lending rate for the retail, that's still in high double digits level. And what we would begin to see as the economy also stabilize, we're expecting the third quarter GDP. So as the economy, we expect to see some improvement within that space. So as the economy also open up, then we'll begin to see the banks also trying to increase their loans to even the retail and the SMEs, who are the major drivers of activities in our economy.
Okay, so that profit taking is what will definitely continue to happen in the fourth quarter. And of course, like you said, the MPC's direction of keeping rates low and banks hoping that banks reduce their lending rates, and of course, long-term instruments will be factored in. But let's look at one area. Of course, today we are looking at the oil and gas segment in Economic Politics Show. Boston Consulting last week said that most global investors are taking green energy investments seriously. And Nigeria also has an opportunity to lash into this huge pool of funds, particularly looking at sustainable financing, green bonds. Are we not likely to see some activity this last quarter, or let's begin to see from first quarter 2021? I think this year has been a bit low, not much happening in that space.
Yeah, I think you're right. We would see some form of traction within the renewable space. There's a lot of funding available to support clean energy. And even for us in Nigeria, we can also look at what government is even trying to do when you look at the economic sustainability plan or installing solar panels. Oh, yeah. So government can use this particular initiative to also attract investments within the green space, attract cheaper investments, cheaper funds within that space to support. And we know if this will also reduce the pressure that we have on the on-grid, on the grid, so that we have a lot of off-grid renewable energy. And even especially for the retail, when you look at the rural areas, that the consumption is really very low. And once we're able to implement those initiatives, it will also boost economic activity within those areas. There are some villages that have been used for simulation. If you look at based on studies, there's this Bamu village in Ogun State that was used as one of its, like, the poster child for the solar renewable energy, and that's economy, that community has improved significantly. Yes, they pay a very high for based on the tariff, but they can look at the based on business activity, things have improved, and there's migration into that area. That's one of the success story amongst a lot of other communities that were used. Some, there's still that belief that it should be social, they are not supposed to pay for it, and the project was not sustainable in those areas because of their belief.
Okay, I mean, that's nice to note. Now, what are your closing thoughts for us looking at the fixed income bonds and markets? What for you would be key for policymakers and investors to watch out for? One very clear area for you.
Okay, I think for investors, they shouldn't take their eyes off the ball. There's still opportunities to make money um, in the fixed income market, especially for traders. But they should also, we are getting to a level where they should also be a bit cautious, playing at the longer end of the curve, between the mid to longer end of the curve. There may still be some opportunity for a slight decline in rates. And they are also holding periods should be very short within this period, because we expect that profit taking would be what would be more prominent within the quarter. And for policymakers, um, it's more of implementation. We have a lot of policies that's already in place, so it's to see how we want to implement, and also for the ongoing protests, which may have impact on businesses. So it's also for the government to also come up with a strategy, and also for us to begin to see some form of traction in how they want to implement some of the policies. Yes, they have said some are short term, some are medium term, but you can long term. So it's about how we are starting, and we believe that we're all just working towards having a better Nigeria that will improve, even attracting investment. Because when we talk about insecurity, it's also one of the major areas that have constrained having foreign direct investment due to different harassment that we also get investors face even when they come into the country.
Thank you very much, Mr. Ayodeji.
Senior Economist and Head Research for Greenwich Merchant Bank. Thank you very much for the thoughts around reviewing the third quarter activities in the bonds and fixed income market, and of course what we should expect in the final quarter. And we hope that the whole protest will be resolved so that we can move on and have a much more stabilized economy and vibrant market that works for everybody. Thank you once again, and hope to have you subsequently in the show. And that'll be all for this edition of the Market Review. You can join our website, www.brochenji.com. Go on to that site, to the right side of the bar, you scroll and look for bonds and fixed income. We have you covered in every aspect of what's happening in the market. Analysts, investment banks, perspectives around the market. We have them featured. You have rich content for all of you that want to deepen your knowledge of the bonds and fixed income market, make the right investment decision, and also know what's happening in terms of the regulatory and policy stage. We have them all for you there on the website. If you also have some views and comments around how the fixed income and bonds market has performed in third quarter and what you think will happen in the fourth quarter, send your comments and views to news@prochange.com. We'll be glad to receive those thoughts and respond appropriately. Let's make this happen again, same time tomorrow, 10 a.m. And to all our young people there protesting, please be safe, and we call on the security forces to please guarantee security, as we have concerns over several thugs and miscreants that are trying to hijack the process and create rancor in the country. So we come your way again. Thank you for watching. Have a nice day and stay safe.